Hello, traders, and Steve Gans here. Welcome to the weekend update on Sunday, June 15th, 2025. It's Father's Day, so happy Father's Day to everyone out there. Now, I'm going to cover a lot of different things in this week's session, and there's going to be a couple little gifts, if you will, in this video. One of them is going to be toward the end, where I take a look at our current market conditions and I offer up a trade concept or a trade idea only to be traded in paper. This is for educational purposes. But given my analysis of the market, I like to start tossing out how someone might apply an options trade to the current market conditions. I should also give the caveat, of course, that our current market conditions can change at any time, particularly with news-related events. Okay, so all that said, let's dive into the SPX and see what these charts are telling us at this point. Of course, the SPX has had a massive rally in recent weeks after a massive fall, but it has rallied right back up into what I would consider to be close to all-time highs and a likely resistance area. We had a little bit of a sell-off late in the week last week. That could, of course, be toward geopolitical events that were happening with Israel and Iraq going at each other again. And that could, of course, continue with any politically motivated events or just major news events in general. But if we were to continue a pullback, I would expect that it should not probably exceed these recent lows, because of that being a support level and our 200-day simple moving average falling around that same area. So again, if we were to continue with a pullback, I would not expect it to really get much lower than that 5,800 mark. So I'm largely neutral on our market right here at this point as it relates to the SPX. So if we look at SPY, of course, SPY is going to be essentially the exact same chart. SPY is the ETF of the S&P 500 index. So again, essentially the exact same thing. If we look at volatility on those two, we're going to see that volatility certainly did spike up a little bit on Friday, but it kind of stabilized as the day went on. So it's going to be really interesting here to see in this coming week what's going to happen with volatility. Is it going to continue to climb with the geopolitical events that are happening? Or is it going to taper back off here a little bit? And of course, volatility is a measure of fear in the markets. Are investors concerned and going out and buying insurance on their portfolios for us? We take a look at the Qs. Qs has a very similar chart. Of course, that big sell-off, big run up, also getting back near all-time highs, also has that major moving average right here, that if it pulled back, I would not expect it to get below that particular range. Then we look at volatility on the Qs. Again, same concept here. Volatility definitely did spike up on Friday, but stabilized throughout the day. Then we look at IWM, which is the Russell Index, the Russell 2000. Now, the Russell has never gotten back near its old highs, so it's lagging for sure. We had a huge down volume here on that day, so that is a bit of a bearish indicator, and the Russell is already weaker. Let's look at volatility on the Russell. We can see that volatility on the Russell is a bit higher than the others and is holding up a little bit higher. So how do I, as a trader, look to use this information? So I come in, and if I'm looking specifically at IWM and I look at the volatility of IWM being elevated, I look at the range that IWM has been trading in, essentially this 215 down to around 201 range or so, and I might look to consider an iron condor on IWM. So if I came in and modeled up an iron condor, it might look something like this. I would go out roughly 30 days in time. I go out to the July monthlies because those are going to be option strikes that are out there, tight bid-ask spreads. And then I'm going to come in this case, I'm going to set up 5-point wide on both sides. That's my risk. And then I'm going to set this in a range. In this case, I'm going 200 to 220. That makes my break evens here 198 to 221. So if I come back and look at my chart, 221 is all the way up here, 198 is all the way down here. So that gives me a pretty wide range for the IWM to play in over the next few weeks. So that would be a trade that I would look to model up. I'm going to hit the save button here. I'm going to share this link. I can go ahead and put this link in the show notes below so that anyone viewing this can click on that link and it will open up a P&L diagram just like what you're seeing here. You do not have to have an OptionStrat account to be able to view this. And then you can come in and modify this trade if you would like. If you wanted to see, gee, I think I can go tighter on this and I can get a more of a P&L out of it, but I have a lower chance of profit. These are all things that with a tool like OptionStrat, you can come in and model this any way you want and then go ahead and save that trade and basically learn from it, experiment with it. So that's the trade concept I have for you here today. And with that, I'm going to wrap up this week's weekend update, but I'm going to ask a favor of you. If you find this content to be helpful, if you find it to be interesting, especially the idea of the new trade concept that I've added at the end of each one of these, please give me a thumbs up, give me a like, a subscribe. Any comments down below would be greatly appreciated as well.